Namaste and welcome to part B of funds flow under simple solution series. As we know, whenever we have to be making a funds flow analysis, we take up preparation of three major statements: statement of changes in working capital, statement of funds from operations, and funds flow statement proper. And we will also prepare working notes in respect of accounts affected by adjustments. As we are aware, statement of changes in working capital includes current assets, current liabilities, plus cash and provisions. Statement of funds from operations or profit and loss adjustment account excludes non-cash investment and financing transactions and prepares what is the generations from the profitability. Funds flow statement talks of sources and applications both from investment and financing activities. Let us look into a problem which appeared in June 2018, which is slightly different. In this problem, they have given a trial balance which talks of working capital opening 1 lakh, closing 2 lakhs, and working capital increase is 1 lakh. And what the problem asks us is, please prepare a funds flow statement for the period ended 31st March 2018. Then they have given an income statement. What I wanted to drive home here is, for a funds flow, there are three statements to be prepared. But when the problem itself gives working capital and increase or decrease, you are not required to prepare a separate, because it is a one-line item. We can straight away take the item from here and adopt wherever required. Therefore, in this problem, we will be doing funds flow statement. You have to understand one thing. For funds flow statement, we need net increase in working capital. We also need statement of funds from operations. Therefore, even if the problem has given working capital, it has not given us statement of funds from operation, which we need to prepare. Therefore, the two statements that you need to prepare are statement number 2, profit and loss adjustment account, and funds flow statement. What do we find from an initial review of this problem? Year, first column is 2018, current year. Second column is 2017, 31st March both. Amount in absolute rupees. Net income of taxes 200,000. Here we have net income after taxes is a figure which is available here, 200,000 or 2 lakhs. We can keep it as profit carried forward, or we can treat it as dividend. What happens if we treat it as profit carried forward? Now, we have already frozen working capital here. Working capital already includes cash. Now, if you say 200,000 is the profit and which we are carrying forward, a corresponding cash has to be included in the working capital. To avoid this confusion of profit and loss carried forward and corresponding cash, we can name it as dividend paid, as there will be nothing added to reserves. If you look into this reserve of 3,40,000 to 3,40,000 has not included anything pertaining to the profitability which we are showing, suggesting whatever profit was earned was distributed. Therefore, under point 3, net income, not it is after taxes, can be shown as dividend paid, as nothing is added to reserves in the trial balance. That is one point. Working note, we need to prepare depreciation charged for the year ended was 60,000 fine. The book value of building and equipments, we will prepare building and equipments, and land was sold for no profit, no loss basis, therefore it can be a straight item. And we have got gains and losses from investments and equipments, therefore we will prepare investment account, and since building and equipment is given after at WDV, we will prepare accumulated depreciation account. Number 2, here if you look into the book value of the building is given as 10,000, and when we do the workings we find depreciation on this building is 20,000. Now if the depreciation is more than this cost, means this is WDV, not the original book value or original cost. Therefore our cost is WDV plus depreciation. Hence this note here, book value of buildings and equipment disposed 10,000 presumed to be written down value, as the depreciation derived against the disposed asset is 20,000 rupees. This is regarding the initial. Let us prepare the select accounts of buildings and equipment disposed, buildings and equipment account, and accumulated depreciation account. This will help us to find out missing figures like what is the amount of purchases of buildings, and also what is the value of investments disposed of. Let's go ahead. Okay, we will be posting to investment account 1,50,000, 4 lakhs to building and equipment, then posting to accumulated depreciation 1,60,000 opening balance. Then in the profit and loss account we have got profit and loss gain on sale of the asset 5,000, we show it to the debit side. Then we have got sale value, book value of the building and equipment disposed of was 10,000 and it was sold for a price of, profit made was 5,000, cost was 10,000 WDV. Therefore the sale value will be cost plus profit 15,000. That is where we are linking it and then taking it forward. Then we have got loss on sale of investment is 10,000. 1,50,000 is the opening balance. Closing is 1 lakh. 10,000 is the loss, means what we realized from sale is 40,000. Then we have got here the amount of depreciation charged. Depreciation charged in respect of building and equipment only, the amount charged is 60,000. That way we have posted all figures into the adjustment accounts. Now we just remove the links for clarity. Now what happens? Out of accumulated depreciation, opening balance, closing balance, depreciation charged during the year, there is a balancing figure. This is nothing but depreciation in respect of sales. Now this depreciation in respect of sales has to be posted in building and equipment disposal account. When we post it there, we realized 15,000, depreciation is 20, and profit and loss was 5,000. Therefore the cost, gross cost is 30,000 rupees, which was transferred out of the gross book value account. This 30,000 will be posted to the building and equipment account. Just watch the movement. 30,000 is what is sold. What we are left with 5,30,000. Our opening balance was 4 lakhs. Therefore, the figure missing figure which we are getting here is we have purchased equipments worth 1,30,000. This is where we prepare this account so that we take care of all things. Same logic applies in respect of investments. Our balance was 1,50,000. Closing is 100,000. We made a loss. Therefore, what we realized was 40,000. This will take care of the main item of bank purchases and sale value of investments, because what the investment said was the book value of building and equipment was so much, Loss on sale of investment is 10,000, but how much is sold? That we do not know. Now we get it. We have sold it for 40,000. Now we proceed to prepare the second account, which is profit and loss adjustment account or statement of funds from operations. We post the loss on sale of investment, interest, gain on sale, provision for tax. Here we say proposed dividend or net income from after taxes, as we have discussed, presumed profit and loss account carried forward to be 0. Then we also post the depreciation amount of 60,000, and with this we have derived funds from operations of 4,60,000. This is the amount. That takes us to the third statement of funds flow statement. What do we do here? We make the postings. Working capital outflow from the problem straight away, 1 lakh. Then we post land sold 10,000. It is sold at cost. Bonds, there is a increase in the bonds, means there is a source, we have received 50,000. Equity shares, it was 1,50,000, it becomes 2 lakhs, 50,000 we received. Current year, we have got proposed dividend or net profit after taxes, 2 lakhs. And we post interest, paid 6,000, tax paid 1,89,000 is what is tax paid, and that is linking of existing items from the trial balance which is given. We have to collect the balance items from our adjustment workings and also from the profit and loss account, adjustment account which we have prepared. We are going to do that keeping the same account. We go to profit and loss adjustment account and we find out what items we could get it. From there we post the funds from operations figure. That is one figure which we post from profit and loss adjustment account. Still we have got items to be posted. Building and equipments purchase figure has to be connected. For that we go to our adjustment account. We post the building and equipment purchase value. With that we have populated everything except one more item, building sale proceeds. Here investment sold is 40,000, and that takes us to the summary of we have got the problem, then we have got the profit and loss account, adjustment account, and funds flow, and funds flow generated at the end. As we can see, funds flow takes 1 lakh working capital outflow, and it has taken 4,60,000 from the profit and loss account, and it has got total sources is 6,25,000, applications is 6,25,000, presuming this. With that the figures are matched, and that's it. We have answered the question of prepare a funds flow statement for the period ending March 31st, 2018. Thank you so much. Thanks a lot.